Today in the grain market, soybeans ended up lower at new high to start, and then the day just fizzled in the end. What promised to be a 7 day rally just really ran out of steam. I think that soybeans had enjoyed, from the numbers, export numbers, so much more from the January and February, really like 6 times what it was from last year. And so it really got the market off to the races, but it just wasn't enough to keep the momentum going. We're back into that 15-cent consolidative range, and maybe that's where the market really ran out of steam. The futures had really occupied this 15-cent range between, like 890 and 905 for quite a while, starting at the very end of January. Perhaps this seems to be a value area that the market wants to stay until we see what's happening for the rest of springtime. But South America really should, with the challenges that they're having, should really underpin the market right here. So I don't see the market retreating in any significant way. Now, on the corn side, it did firm up. The export demand is really looking favorable, especially because the corn had been lagging behind for a while. But it was needed because the ethanol is really, the production on the ethanol is expected to really decline, of course, because of the crash in really the crude market right now. But perhaps some of the overflow buying from wheat and soybeans really pushed the market up. Technical traders who see that the grain spreads were kind of stretched to the limit realize that these are going to start to snap back sometime soon. And so we did get a little bit of a bounce for corn. So it just seems to be inching its way up, moving a little bit higher, but still pretty promising from the corn standpoint, because we've been really down in the basement for quite a while. But now that spring is here, Mother Nature is someone we're going to be watching closely, and that's what we're going to be paying attention to as we start to approach the end of the month to get those planting intentions. Now, wheat did surge today. That was really the big leader, 6 straight days of up. And this market has really rallied off its bottom in a way that we were kind of surprised to see. That momentum from, difficulties in Russia and in the Ukraine, that added to the friendly aspect of the fact that China is really starting to buy and honor their phase one trade deal. I think that the futures were completely ignoring the fact that U.S. wheat prices are higher than most everyone globally. And so you would think that we've been priced out of the market. But here we are with the momentum behind these markets, and who knows? $6 looks pretty close right now, and could we see $6 wheat? It's very possible. Certainly, with Kansas City and Minneapolis really on board this rally, anything could happen at this time. But we know volatility is going to be plentiful in the next few days.